Hey guys, thanks for stopping by thetradinganalyst.com. This is Taylor, and I'm going to give a heads up look into the market, what I'm seeing, where I expect the market to go, and exactly why. So first I'm going to cover the short-term action on the market, kind of just the near-term levels and stuff. Then I'm going to kind of show you a longer-term perspective to show you kind of where we are in the market cycle, because this is very, very important to know where we are in a cycle. Are we in the beginning of the cycle? Are we at the end of the cycle? Are we at the middle of the cycle? Okay, that will help you make better decisions in the market. And then I'm also going to discuss, show you the leaders of the market, and that will give you a really good picture of the health of the market. So before I discuss the short-term action in the market, what I want to discuss really, really quickly is what not to do when you are investing or trading in the market. I see a lot of people that are bearish right now, and hint, I'm not bearish, okay? And a lot of people are bearish right now, and they're bearish for all of these other reasons other than what's happening with price. Price is heading higher. That is bullish, okay? A lot of people are bearish because of the coronavirus. We don't know. Obviously, that is not really affecting the market because price is heading higher. We get paid by price, the movement of price. If stocks go higher and we are long, we make money. If stocks go lower and we are long, we lose money. Okay? Conversely, same thing on the short side. If you're short and it goes lower, you make money. Okay, so you get the point. The point is that a lot of times these other things go on outside of the market, like the coronavirus. Okay, but it doesn't really affect the market other than a 2-day dip. Okay, or bearish divergences on the chart, like RSI or MACD is showing some kind of bearish divergence. Meanwhile, price is heading higher. Price doesn't need the coronavirus. Price doesn't need MACD or RSI to head higher or lower. Many times these things move independently of one another. So you can have price moving higher, meanwhile you have a bearish divergence on RSI or MACD, but price still heads higher. And at the end of the day, all that matters is price. Okay, no news story, no indicator, nothing else. There's so many other things out there, but the only thing that you need to be focusing on is price. And this is a super, super simple way to make money in the market, because a lot of people have so many opinions about things that are going on, and at the end of the day, those opinions don't matter. All that matters is if price goes up or down. Okay, and you can see that clearly on the chart. So that's what I like to focus on, and I think that's what most people should be focusing on as well, so that they don't miss out on moves. Okay, because a lot of people call this a bubble. They call this like 1999, 2000, before that crash, yada yada yada. But they're going to miss out on a big move. Okay, so now let's discuss the actual price action here on the S&P 500. So if you look here, we had another consolidation period in the market. Okay, I'm going to show you right here, traded sideways right here. Really for, since the end of December. Okay, came up here, bounced right here, and we traded within this range. We just broke over that range today. Well, yesterday kind of, but today really is the true break over that range to a new all-time high. New all-time highs are very bullish for the market. Did you know that the market trades at a new all-time high? I think it's something like 80% of the time. Okay, that's why it's so much more beneficial to be bullish than bearish, because the market is continuously making new highs. Okay, so again, we traded sideways. We kind of had a rest period. We had a little dip. and we bounced. Not only did we bounce, but we broke over that previous high right there. Okay, so maybe at this point in time when we dipped, we didn't know maybe it was going to get rejected, maybe we were going to chop around a little bit, maybe even potentially even head lower and break this support. Okay, that was a maybe at that point in time. But now that is very, very unlikely, because not only did we bounce and head back up to these highs, but we actually broke over that resistance to new all-time highs. So, long story short, I think we are going to head higher. This is very similar to this action right here. We traded sideways in that range here in November, and then we broke over that range. Boom, and you can see a big move happen there. There was a little mini sideways trading right here. Boom, and then we headed higher. Okay, and look at where we came back to rest. Just back to this support. Bounced right at support. All right. I covered this action here. If you're not following me on StockTwits, you need to do it. Right now, click that subscribe and follow button on my StockTwits profile. It's stocktwits.com/thetradinganalyst. And the reason I'm saying that is because I do a lot more posting on there. I haven't made a video in maybe 2 weeks, but you can get a lot more up-to-date stuff on StockTwits by following me there. Because at this point in time, I mentioned this support. I showed this support and I said we were likely to get a bounce right around there. And not only did we bounce right around there, we bounced exactly off of there. So that could have helped you make some money. Okay? So follow me on StockTwits. All right. So now we're going to look on the longer term chart here. And I want to show you the longer term chart just to show you, give you a little bit of perspective of where we are in the trend, and show you some similar action that we've seen in the past. So the most recent action that was similar to this recent action that we saw in 2008, 2019 was right here. Okay, you can see we traded within this range right here. Saw a big dip right there. I think this is about a 17% dip that we saw, or maybe it was 17% from here to there, something like that. But it was a pretty significant dip, and this was a secular bear market. Okay, the market was trading sideways. It didn't crash like 2008, 2001, but it wasn't that bullish. Okay, and it needed a rest period, so we rested. We broke over resistance, and then we broke out for about 2 years before taking another rest period. And here we are. Here's that rest period right there. Oops. You can see that right there. Okay. Rested between this range. Boom, 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 boom. And we also had another little rest period right here where we kind of traded sideways within this range. Right here, even more near term. Okay, boom, 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 didn't go anywhere. And that was just a couple months ago that we just broke out. That was the beginning of November is when we broke out there. So we're only a couple months, or a few months into it. 3 months right now. 3 months into this breakout. Okay, I know a lot of people think, oh, it's this crazy overvalued market, but we literally just started breaking out 3 months ago. Okay, 3 months might seem like a long time, but when you put it into perspective of, last time we did something similar right here, we broke out for 2 years. 2 years. And that's from this breakout point to this top. Okay, 2 years. Very similar action to over here. And this was in 2011 to 2012. Had a similar kind of rest period right there. Notice how I'm not being too technical on these terms or on these patterns. I'm not. This isn't. You're not going to find these patterns in a textbook or anything like that. You don't want to get too technical on these patterns. It's just a rest period for the market that trades somewhat sideways and then breaks over that resistance. Okay, so that we did that over here, and you can see here we go, traded sideways. right there, broke over that resistance here, and you can see massive move between 2013 and 2015. All right, so that's about 2 years right there. You can go back and find many other instances like this going back decades. Okay, these are just the last few cases that were very similar to the action we're seeing here. The point is, the market takes a rest period, and after it rests, it's ready for the next move higher. Okay, this is the same thing that's been going on for decades and decades. Okay, the market is built to go higher. It's been going higher since it started, hundreds of years ago. Okay, so after taking that rest period that we saw between 2018 and 2019, we just broke out. We're 3 months into it. So if it's anything like this breakout that we saw over here in 2013 or the end of 2012, or this one we saw at the end of 2016, the beginning of 2017, then we have a long time to go before we're going to see any kind of major retracement. Okay, so that's my view on the market. So next, what I want to kind of do is discuss the leaders of the market. Okay, the leaders. I'm going to start with Apple. And the reason that I'm discussing the leaders of the market is because, and this is a super easy way for you guys to get a quick checkup on the health of the market, is to just check these leaders. Okay, because the market can't really move without Apple or Amazon or Google or Microsoft. Okay, these stocks take up a heavy weighting in the indexes, and the market tends to trade with these stocks. Okay, so if all of these stocks, Apple, Amazon, Google, Microsoft, are all healthy and performing well, then most likely the market is going to perform well as well. Actually, not most likely, it is. Okay, so here's Apple, and I'm not discussing these stocks here as a buy recommendation or a sell recommendation on these individual stocks. I'm merely just showing that they are essentially not bearish, kind of like a defense attorney. The defense attorney, or the the prosecutor, the onus is on the prosecutor to prove that the defendant is guilty. Okay, it's not up to the defense to prove that, I think. Okay, I'm not an attorney. Maybe I shouldn't be talking about law stuff, but so the onus is on the bears, essentially. Okay, right now we're bullish. Okay, on Apple, we're trading sideways, kind of consolidating here, and this is not a bearish behavior. Okay, this is just merely a rest. Very similarly to how we did over here, we traded sideways in this range right here. Okay, and you can see after trading sideways, we ended up breaking that resistance right here and heading up for another trend higher. Okay, I'm not saying that Apple is going to do that. I'm merely pointing out that Apple is just a few bucks from its all-time high, and that it's not bearish. What would be potentially bearish is that if we broke this support. Okay, if we broke 300, maybe that could be considered bearish on Apple, but it is not. Right now, it is bullish. So that stock is healthy. Microsoft just made a new all-time high today and has been trending higher. We just, I believe it just reported earnings right here last week, I believe, on this day. And again, the last time I reported earnings before that was over here. And you can see it gapped up over resistance and saw a big trend higher. And again, we gapped up just recently on earnings. So we have things that actually matter for stocks. Not the coronavirus, not some RSI divergence or anything like that. We have a gap up on earnings. Earnings are what move stocks, okay? Because that's the health of the stock, okay? How much money are they making? How much money are they losing? I don't read earnings reports. I just follow the reaction to them. So price goes higher on earnings. Earnings must be good. Okay. So we did that. We made a new all-time high right here. Again, nothing bearish about the action that we're seeing on Microsoft. All right. Again, this isn't a buy or sell recommendation on these stocks. I'm just merely pointing out that these stocks are not bearish and they're actually bullish. All right. So here's Google. Google, again, traded sideways here for a few weeks. Right there. We just broke over that resistance. We just made a new all-time high today. New all-time high. All right. That is bullish, right? Okay. Bullish. Google. Next one, Amazon. After reporting great earnings right here, we actually broke higher. And I want to show you, Amazon is actually, and we bought Amazon for myself and for clients that I manage money for. I actually manage money for people. I have an alert service where people can follow alerts, and I have a money management service as well where I manage people's money and I trade on their behalf. So Amazon is the largest holding that we have. We bought it in the 1800s and we bought it added to the position right here at that low right there in the low 1800s, and we still have our entire position right there. We actually added to the position just over 2000 after it confirmed that breakout right there. And I'm going to show you Amazon. Actually, I'm going to show you 2 years. Actually, yeah, 2 years is good enough. Okay, so Amazon just broke over a 2-year resistance. Boom, boom, boom. Came up, gapped up on earnings reaction, and then continued that breakout over that. Okay, so this stock is just in the beginning of its breakout. Amazon just started to break out after we traded sideways here for a long time. For a long time. Look at this. Boom, boom, boom. That's about 6 months of sideways trading. And if you look back on the monthly chart, I'm going to show you about 5 years of action. All right, so I'm going to delete all these lines. But as you can see, Amazon was super coiled between this range. Look at this. Trend higher, trend higher, trend higher. But notice the last 2 years, we basically traded sideways. And we're just starting that breakout now. So I highly encourage you to utilize monthly charts. Monthly charts. And looking at things from a longer term perspective. Even if you're trading weekly options, okay? Because if you're trading weekly options, you're not going to be an idiot and short based off of some topping tail candlestick pattern right there. Okay, that's for newbies. That's what newbies do. But veterans follow the long-term trend, and they know that this monthly chart just started its breakout. Literally is in the first month of its breakout. You can see similar things happen here. We traded sideways for about 6 months, and this pattern isn't even as big as this one. This one is a huge 2-year pattern. Okay, this is just a few months, and we went from about 900 to 2,000. It doubled in price in about 2 years after this breakout. All right, so something similar can happen here. Something even maybe even bigger than that can happen right here after trading sideways for even longer, for almost 2 years right here. So again, if all of these stocks, Amazon, Apple, Google, Microsoft, are all bullish and breaking out, the market can't really head lower while these stocks are bullish. Now, if Amazon just fakes us out and breaks this level and heads lower, then we can start to look for some weakness in the market. Okay, if Apple starts to break this support that I mentioned right here, then we can look for some weakness. If Google fails this and ends up breaking this support, then we can look for some weakness. okay? But we don't know that. The known information is bullish, okay? We traded sideways. We just broke out of this range. It's heading higher. That's what we know. That's what we know. We like to react to price, not guess, okay? Because at this point, you're most likely going to be very wrong by shorting the market or these stocks, and you just be guessing at this point. Now, I short. I am not a perma bull or a perma anything. I just react to price, okay? And right now, price is very bullish. Now, if price shows us some weakness, if these stocks get weak, then yeah, we'd be looking for some short trades. But right now, they are bullish, and I think the market is very bullish right now. And I think that shorting this market would be a big mistake. So I hope that this video has helped you out and help you see the market from a different perspective, or maybe confirmed some of your thoughts. Please reach out to me if you have any questions at all. I'll be more than happy to chat with you. Yeah, and what you're looking at right now is the portfolio tracker here at thetradinganalyst.com. And what this is it tracks all of our closed out trades that we have alerted to subscribers in real time via text message. So all these entries that you see here and the exits were all alerted to our paying subscribers in real time as it happened, both the entries and the exits. All right, and you can see the vast majority of the trades are winners here, and you can see obviously not all of the trades are winners, but the average win here is much larger than the average loss, and this is how we remain very profitable. The average win is 50%. The majority of our trades are for options, but we do trade some stocks as well. You can see there's a few stocks that we've traded recently right here, but the majority of the trades are for options. 50% is the average win. The average loss is about 30%. The average win on a dollar basis is more than double the average loss. Okay, 3,400 on the wins, 1,600 on the losses. And the reason that our wins are so much larger than our losses is, first and foremost, we have tight stops on our losses, and we let our winners run. But not only that, but we actually also not only give these alerts here for the entry and the exit prices, but we also recommend a position size as well. Most of our trades are for full size, normal size, but some of our trades require more capital because we're that much more confident on that trade. For example, Amazon, the stock, remember that I was discussing in this video, we actually took a 4x position, 4 times the normal size of our account. So as you can see, we bought it in the 1800s. It's now over to 2100 right now. So this is going to be a very big gain, not just on a percentage basis, but also on a dollar basis, because we're putting so much more capital on it, and that is how you remain profitable. Not only are we profitable, but we're very, very profitable. The last 2 years, okay, we've been using this portfolio tracker to track all of these alerts for 2 years, $385,000 in total profits based off of following all of these alerts. Okay, the wins, the losses, the break-even trades, everything gets factored into this profitability. Okay, and this isn't a total account value or anything like that. This is actual profits based off of these alerts. So if you would like to make winning trades just like this on a regular basis, then I would suggest that you sign up for the alert service that I have right now. We have monthly, quarterly, and annual options, and as soon as you sign up and join, I'm going to start sending you these alerts right away. The entries, the exits, everything. You're also going to get a watch list. You're also going to get access to me personally throughout the trading day, on the weekends, whatever. Just message me if you have any questions, and I'll be more than happy to answer them for you as well. In addition to that, I also make private member-only videos, as well as you get access to a ton of educational content that I've made exclusively for paying subscribers here at thetradinganalyst.com. So sign up today, and I'll start sending you alerts right away. I hope to see you in there.